Good morning, everyone. I'm Vince Lancy, and this is the market rundown, the Gold Fix market rundown. We're running a little late today. It's 8:41. So we're going to skip the markets. How about this? The dollar is weaker, metals are stronger, and oil couldn't give a damn. Stocks are up a little bit. Okay, let's get right to it. There's the front page. There's the home page. We just sent the post out on the top right-hand corner. We're going to be discussing that post as well as Platinum, as it was a big part of yesterday's conversation with subscribers. We initiated a trade, and we're going to be taking some of it off, so we'll be probably a little clipped in our conversation today. All right, here we go. Starting with Howard Marks. Here is an exclusive breakdown of basic economic concepts that may seem obvious to most Gold Fix readers, but since financial wisdom is cyclical, sadly, basic economic laws must be repeated from time to time. In a private letter to his fund investors this month, Howard Marks delivered a comprehensive critique of interventionist economic policy, emphasizing that efforts to override fundamental economic laws such as supply and demand, incentives, and market pricing tend to produce more harm than good. Through examples ranging from rent control, he goes through that, the fire insurance in California and how that failed, and tariffs and fiscal responsibility, which is where we are right now. Marx argues that markets, while imperfect, yield more optimal societal outcomes than government-mandated distortions. That story continues in the premium post, Howard Marks, The Logic of Free Trade. Platinum's turn. All right, we're going to talk about Platinum now. I'm going to start with a clip from yesterday's market rundown. Hopefully you'll be able to hear it. If you're playing this game, you're long now. I'm not long now. If you're playing the game more cautiously, you're a buyer above 1327, and you're a seller below 1297. That's it. Above 1327, 1390 should not be a problem. There you have it. Hopefully you heard that. In yesterday's morning premium post, gold and silver, the outlook for 2025, that's the one with the dragon on it. We laid out why the platinum rally would likely continue. Quick side note, if you look at the graphic that we threw in there with the dragon, it's gold, silver, and platinum. Okay, this was not just about gold and silver. One factor not properly processed by banks calling for it to be only temporary, in our opinion, was China demand. We continually hear of the high price of platinum and silver being detrimental to further Chinese demand, but we believe that is wrong. Continuing from that analysis, the price of platinum and silver are not high. We believe the high price of gold is driving Chinese demand into the white metals, seeing value in their relative price. We've made the case that gold is the king metal and it's going to rise all the metals higher. And that's one of the goals that China has in the longer run. People see how far gold has moved, and they are now looking at the whole commodity complex to follow the pace set by gold. Not you, oil, not today anyway. Who are we to argue with them? Certainly the banks are not long silver. We know this for sure. And many others have also identified it. Chris Marcus has been on a rampage noting that, and he's been right. Most banks were short platinum before the face-ripping rally that just happened. Continuing from that analysis, you can read the attached. Moving on to what happened next yesterday. We put on a trade yesterday. Trading-wise, we put on a position. You can read the words there. We got long platinum with the spot market trading 1338 as a reference point. We're risking one, I should say, to make 2.5 in this idea. The market certainly seems overbought, but didn't gold seem overbought a year ago? When these sort of things started happening, the banks at first sometimes they're in denial. Anyway, the two positions we have on currently are long silver at approximately 36 spot and long platinum at the equivalent of 1338 spot. And because of the rally in platinum today, assuming that it holds, it's holding, we will be taking off 2/3 of this trade today. If you want to know more about the platinum situation, our focused coverage on platinum started in March, advising readers to keep an eye out on the forgotten metal. In June alone, Goldfix wrote 6 pieces extolling the virtues of platinum. Here are the ones to read if you seek to get caught up on this delayed but increasingly strong move. In March, we were breaking down the Hartnett report, and we saw something in silver and platinum that was far more interesting. And so we let readers know in March. Platinum, forgotten but not gone, was the June 10th rally analysis that made us say it's not over yet. And June 15th, Platinum Goldman asks if the rally is structural or temporary. They asked, their answer was they believe it was temporary. Well, we believed and said back then, we think it is structural. Again, it probably is temporary, but we don't think it's going to get back to 1300 anytime soon. And if it goes to 1300, you don't want to buy that dip. We think it'll probably go below that. Other related posts, gold and silver outlook for the rest of 2025. We mentioned that. And Powell will keep waiting to cut. That's an analysis of, based on Powell's data biases, he's going to ignore cooling inflation and focus on interest rates, not interest rates, unemployment to make his decision going further. Why? Well, because he cut too soon and he's got to wait. He cut before the election. Okay, data on deck. Friday is the data we care about. That's PCE, although I'm not so sure the markets will care about it as much. We're going to go through the charts very, very quickly. All right. This is the 1 month platinum chart. Now you can see we're butting right up against, we're in this range. So if you're looking to be out of longs, well, below 1333, which is the way things are looking now, the break-even level for the 1300 straddle longs is where you want to get nervous. So back up under 1333, you want to be flat, and under 1300, you want to be short. But right now, between, say, 1333, give or take, right, and 1528, it's on. Okay, I wouldn't expect any big selling. If we stay in here for the rest of the week, I wouldn't expect any big selling until we get to 1525 or so. And it's really not that hard to get there when you think about it. And then above that, it's just, I have no idea. I got to be honest with you. I haven't looked at it in a long time. Here's a weekly chart. The market here mentioned a couple moving averages that we want to draw to your attention. If you look at, these are weekly moving averages, 50, 100, 200. The 50-week moving average has crossed over everything now. We believe this is significant because, well, generally speaking, when the moving averages kind of cluster up and go nowhere, you get a lot of noise. Well, the 50-week moving average has decidedly turned up, and the 100 has turned up, and the 200 is kind of flat and kind of going up a little bit. I would expect if the market dips and the slope of the 50-week moving average stays up, doesn't turn down or doesn't lessen its degree of slopeness, well, then this market is going to be bought on dips. I'm not sure. And as I said, I'm taking off 2/3 of my own trade today. So have a great day.